Good afternoon, everyone. Just waiting for a few more people to come in. I think we've got 23 at the moment, so there's over 100 registered. So thanks for taking the time out. I know for everyone that's involved in business in any way, shape or form, this is a crazy week. Not to mention, obviously, the health impacts on everyone else and the health system and the healthcare workers. For us today, we won't focus on that kind of thing, but by no means does that derogate from how tough everyone in that sector is doing as well. The main point of our webinar this afternoon is to see how we can help businesses get through this period. As you'll know from those of you that have joined, we're going to be conducting this daily from 2:30 to 3:15 for the foreseeable future. The purpose of each webinar will be to deal with obviously a primary piece of content and then answer any questions that have come through in the 24-hour preceding period. So we've got 40 now. Just bear with me for a few more minutes and then we'll kick off. Can everyone see the slideshow there? Can I just get a comment from somebody that you can, in the Q&A section, that you can see yep, great, excellent. I've got slides, perfect. Yep, everyone's got it. Okay, great. So unfortunately, we don't really have the luxury of time to go through and introduce everyone. As far as we'll get is that there's a really wide range of business members on the webinar, anything from B2C facing service industries to B2B manufacturers and the alike. We've also got a lot of accountants, insolvency practitioners and other lawyers on the webinar. I guess the objective of the webinar is to give you as much free common sense advice in a 45-minute interval that cuts through the media hype, so that then you can either decide who you need to speak to next, or alternatively it gives you enough of an answer that you can go away and actually self-implement yourself. So typical lawyer, as always, this stuff is general in nature. As you all know, it's moving extremely fast, and every single day we're getting more updates on who's shut down, who's operational, and what the impacts are from a stimulus perspective. So the primary topic today will be on the Commonwealth stimulus package and how it interplays with what you may be thinking about doing with your employees, particularly for those of you that have had a forced shutdown as at midday today. On that note, I would say that I have got half a dozen questions that I'll seek to get through in the second half of the webinar, which relate not only to the stimulus, but all sorts of topics. And then in addition to that, please, throughout the webinar, go for it. Just hit me with Q&A in the Q&A section. All right, so as we know, we moved well beyond the stage 1 lockdown measures that were implemented over the course of the last couple of weeks. I won't go through those again, but ultimately where we've got to as at midday today is that basically anything that is group related, whether it be pubs and clubs, gyms, religious places of worship, and etc., are shut down. So that has huge implications for those of you that are in those industries. Obviously, your revenue tap is turned off immediately. Most of those businesses are still going to be incurring rent. They're still going to be incurring wage expense. And that's what we aim to try and help you with today from a legal perspective, or from every perspective, but with a legal take on it. Look, I don't want to spend time on the state-by-state nuances. The main thing is that schools are still up in the air. So we're seeing that Victoria has taken a firm measure to shut schools as of tomorrow, whereas the other states are sort of keeping it a little bit fluid. Beyond that, I mean, the main take home is that supermarkets, shops, retail, freight and logistics will continue to operate countrywide, to my knowledge. And look, if there is anything that I say during these webinars, either me today or Olivia tomorrow or one of the other team members throughout the course of the next few weeks, just hit us straight back and say that's wrong, I've seen something else, just so I can clarify it for the whole group. Otherwise I'll lead you down the wrong path. Obviously there are some other things there, but from a trading perspective, unless you're in the list announced by Prime Minister Morrison last night, you're still operational. So that means for businesses, a lot of B2B businesses like us, professional services, tradespeople, construction industry, they're still trading. And you know, I guess I'd like you to look at this from the lens that might not be the case in 2 weeks' time. And there's been a few people today that have been caught off guard without a proper sort of crisis plan as to what would happen if they were shut down. And if you are in those industries, those B2B industries, particularly that are still trading, please don't leave yourself in that position in the next couple of weeks. It doesn't need to be anything complex, but just have a game plan as to what you will do if your revenue tap is turned off as well. All right, so before I move on, does anyone have any It's a good start for day one. The shutdown stuff that's been implemented as at midday. I thought that would be the case because most people seem to be across it. It's more the implications of, well, what happens when I do get shut down and what's the flow and effect for my employees and my landlord. And that's what most of the questions centre around today. Just keeping an eye on the time, 22. So at about 5:02 we'll stop and I'll go through the day's questions. One thing I really wanted to touch on very, very briefly was reporting, and we've had a lot of questions in over the last sort of 72 hours as to what happens if there's a case of COVID-19 in my place of work or my franchisee's place of work. And look, there's a little bit of conjecture about it, but we've taken a pretty hardline view that you should be reporting. Yes, we could find you loopholes to get out of why you should be reporting. I guess my view is in a common law country where negligence is in the back of everyone's mind, suck it up, report quickly, do the right thing by your employees, your customers, and the broader public. So we take a four-pronged approach in our recommendation. We recommend that if it's not the health authority that's told you about the instance, in most cases they will tell you, not the other way around, but you should tell the health authority. Secondly, look, there's conjecture as to whether it is a notifiable disease under the various pieces of safe work legislation. We take a pretty workers' compensation insurance. No one can say that you did not do the right thing. And then thirdly and fourthly, obviously your employees and your customers, that obligation flowing from common law and negligence, and just a sense of good business practice. I think that's what I would say. I think that's one comment I really want to make at the outset of these webinars. We've had a little bit of pushback before it escalated as to people saying, yes, but take me to the exact section of legislation where it says that. And fundamentally, there are going to be many, many instances over the coming weeks where that just cannot happen. The legislation is evolving, you know, even to get through some of the stimulus measures we've seen overnight. There's rushed through pieces of directives giving Josh Frydenberg power. This is not stuff that has been sitting in the back cupboard for years where people can just point to a section in an act. So you've also got to use a lot of good business judgment to just basically cut through it and say, okay, well, there's not an exact piece of law, but we're going to do it this way, and here's the common sense rationale behind it. Okay, so that's our recommendation on reporting. Now we're going to get into stimulus, and a lot of questions today flow from stimulus. The first page I want to really touch on, well, I do want to touch on it in a little bit of detail, because particularly what used to be known as Centrelink, I believe is now Service Australia. The Centrelink and the the unemployment allowances, for want of a better word, that's really where you're going to see some help for those people that have to get stood down, either on a temporary basis or alternatively, if there are people that have to be made redundant on a more permanent basis. So if we look at page 8 there, which is expressed in much more detail on the Treasury website, which gives some really good practical examples, you can see that obviously that 10 days ago, or 10 or 11 days ago, we saw the first $750 cash once-off stimulus for people eligible for those allowances and benefits. And then yesterday we've seen quite a chunky raft of other things that can go to help those people. Now, we haven't gone as far as the UK and said that there's going to be an underwriting to 80% of wages. And initially, I must admit, and this is not the time for politician bashing, but initially I thought, well, maybe that was a little bit of a failing on the part of our government. Having read the stimulus in extensive detail last night and today, I think that we probably do get close there anyway. And I think that probably stage 3, they may take us to that level if they have to, which is what it is. So you'll see that obviously coronavirus supplement B is the addition to the typical unemployment or job seeker allowance that your employees may be able to access if they're stood down or made redundant. There's an excellent example on this fact sheet here, which I will take you to very briefly if you can bear with me. I think one of the comments we've been making today as we've been preparing some stand down notices is that this fact sheet here is one of the most important pieces of documentation that anyone that's made redundant or stood down can get at the moment, particularly the practical examples that you'll see on pages 3 and 4. So I just really want to touch on this very quickly because you can read it in your own time, but you'll see that this lady, Leonie, 2 children, she stood down but not on a permanent redundancy basis. By the time that she's a mother, she has a couple of children, by the time that the eligibility criteria are finalised, you can see that she obtains approximately $1,500 a fortnight. Now, it's not shoot the lights out, amazing income, but we're no longer in that territory. I think it's a good solid amount of money for some of your employees to cover their expenses in the event that your business has no other option. Now, there'll be some of you sitting on the call that operate on 3, 4, 5, 6 months working capital in the bank. There'll be others of you on the call that have no working capital in the bank and in fact have been continually relying on financial comfort of your creditors for some time. And that's something I do want to touch on when we get to the next bit of the stimulus about insolvency and just keeping an eye on when you became insolvent. So I'll touch on that in a moment. You'll also see that there's a second example here for sole traders who are also going through that. I don't think we'll have a huge amount of sole traders, but if we do, those sole traders or even those owners of those businesses can also go and access the individual New Start or job seeker allowance, as it's now called. Yep, I've got a question. Sorry, I don't think anyone could see that. I don't think anyone could see that government fact sheet. If you'd like, I'll circulate the paper this evening, and you can. I'll circulate the paper this evening, and you can click the link and follow through. The Treasury website has all of the fact sheets for each part of the stimulus. The bit that I really want you to focus on there is the standing down piece, because I think the amount of calls we've received this morning from people saying, "Oh, I've got to make half my workforce redundant. I just can't afford to pay them anymore." I think it's a little bit of a knee-jerk reaction. I'll explain why when I get to the second part of the stimulus, but please, everyone, even if you are closed, take a deep breath, speak to your accountant, and speak to your accountant as to cash flow. Sorry, I've got another question here. Yeah, so I've just had a question. We've just had a question that's come in as to sole traders. Yes, sole traders, if they do fall below the leaker and other allowances, they will be entitled to be escalated to receive this money. So you can on the Treasury website there, and they can find some more detail. I'll just touch on a couple of other questions. Okay, so I've got another question here. How long is the stand down? Section 524 of the Fair Work Act deals with stand down. Businesses would, in theory, be relying upon Section 524(1) subsection C, which allows people to stand down for the period of unforeseeable or uncontrollable circumstance. Again, it's one of those things where we've been asked for definitive answers, and it is a moving feast. You'll see that, the simplest way to answer that is it's as soon as your business is up and trading again. As soon as, if you're a gymnasium, for example, as soon as that ban is lifted, then technically you would say, okay, stand down has ended and you're now redeployed. Or alternatively, if the business, if you didn't feel or you observed and the business didn't recover, we may be looking at a redundancy scenario. I'll move on to the next page just because we're short on time. Okay. Did anyone have any more questions on those individual measures before I get into this page, which is the business measures, which is where I want to spend the most time? We've got 60 of us in the moment, so that's it's a pretty good indication that people are banding together and looking for a bit of help. It's really impressive. It's tough at this time. Anyone that owns or is involved in decision making in a business probably feels pretty alone. And yeah, you definitely should reach out to each other. I don't have consent to share each other's details, but I'm sure each of you can connect through your various networks. I've got another more specific question about people working on visas. There is some commentary in the Treasury papers. About foreign workers being eligible for those individual incentives as well. It's probably beyond the scope of the webinar today to go into that, but it's a really important one. All right, so let's fly through these business stimulus measures as promptly as we can whilst giving them attention. So we saw back on the 12th of March the two initial pieces of stimulus. The first was the instant asset write-off. So that was increasing the instant asset write-off from 30,000 a year to 150 for this financial year. Now, look, there's two presumptions there. One is that businesses have to be profitable in this financial year, and therefore it has the effect of reducing their income tax more promptly. And two, that businesses have to be spending. So look, whilst it's a good measure, I can't see that anyone much on this webinar is going to be jumping over the moon over the instant asset write-off. We saw an employer cash flow concept back on the 12th. I won't go through what it was at the 12th, but I will go through as to what it was yesterday. As at yesterday, basically, Prime Minister Morrison, Treasurer Frydenberg have announced that they will, that the government will provide a cash refund in your April BAS equal to 100% of your PAYG withholding that you've remitted for employees for the January to March quarter. So for a lot of businesses, that 50 grand will come back immediately on the 28th of April. For those of you that are trading with less employees, maybe 1 or 2 employees, that or a higher number of lower skilled workforce, that will come through over the periods April, May and June. Just got another question here. Yes, sorry, I've just had a clarification there. Sorry, it's based on the March month, not the quarter. So it's not based on January and February. It's based on the March, 3 times the March month, which is probably better for businesses, given that sometimes businesses can have a lower workforce over summer. Not always, but sometimes. I've got a couple of others. Yes, we will supply the links to the Treasury at the end, most certainly. Definitely. I've had another question. It's a tax credit, so only in a refund will you get the cash back. Maybe Darren or some of the accountants on the webinar will jump in if I'm wrong. My understanding is that regardless of that, you do get the refund. It's well, the bit that's not clear to me yet, and anyone that can elaborate on it, is whether the PAYG debt or obligation still sits on each business's ATO portal and is payable sometime in the future. So if I will do some more digging on that, but if anyone has the answer, feel free to share it. But my understanding is that it's cash, not credit. There's a second element of that employer cash flow concept, which you'll see is payable. Which you'll see is payable over the course of July through to October in 4 monthly instalments as well. So if you receive 50,000 in April, you'll receive 12.5 per month over July, August, September, October. So, sorry, just divert to a couple of questions. So I have had that clarified. It's credited to the integrated GST account. So it does net off the amount you owe the ATO before cash comes back into the business. Yep. So it reduces the debt first. So for those businesses that have GST payable, you may not end up with it back in your bank account. I've got a couple of questions here that are slightly, I'll come back to them offline. They're slightly too long to deal with in the 45-minute slots, but I will get to them. So in any event, I mean, this is premised on the basis that people are paying their tax on time. We know that, all of us on this call know that there's many businesses in Australia that are not, and that are on payment plans and those kinds of things. So it's not as though, if a business is shut as at midday today, it may be the case that those people aren't necessarily going to be immediately better off, but the financial impact overall should be better if you can hold on that long. We've seen, in addition to that we've got the SME guarantee debt provisions. Speaking to some business bankers this morning, they're pretty keen to get some funding out there. The Commonwealth Government have said that they will back 50 cents in the dollar for up to $40 billion worth of loans, and those loans are unsecured 3-year loans at up to 250,000. All right. So this is the stuff that turns. This is the balance of it is a little bit more contentious. So you'll see that statutory demands. So for those of you that have got, this affects not only matters going forward. So this also is rear looking as well. So if you had a debtor that owed you, if you had a debtor that owed you 10 grand yesterday, you would no longer have available to you for 6 months a statutory demand mechanism. The statutory demand minimum threshold has been lifted from 2,000 to 20,000, and in addition to that, the time for compliance has been increased from 21 days to 6 months. Now, critics of this stimulus measure will say, well, hang on a minute, that's just going to encourage everyone to rack up huge amounts of credit with their creditors and then leave them hanging at the end of the period. I would hope that businesses have more of a moral compass than that, but it's yet to be seen. In addition to that, probably what I would say, and it's relevant to the next point, the 6 months relief for personal liability for insolvent trading. The point there is that if your business was insolvent last Friday afternoon at close of business, that's probably a different play to your business becoming insolvent at the end of this week as a result of a closure. There's nothing that and the devil's in the detail, and we haven't seen the detail yet, but there's nothing that indicates to me that if you've traded insolvently from January 2019 through to March 2020, that you're going to be absolved of liability, and you'd argue, nor you should. This is to protect during this window for those businesses that did have a viable going concern, and for whatever reason, namely drop in revenue, that is no longer a going concern, and therefore those businesses have to rely on financial comfort of their creditors, or even just tick along as best they can in order to make it through the period. Where are we up to? And then for those I just dropped to the last one before coming back to the payment plan point. For those of you that had a personal debtor, now look, most B2B providers won't. I don't think we've got any motor vehicle financiers or other people of that nature on the call, but we're not seeing a huge amount of bankruptcy notices being issued in B2B general debtor-creditor relationships in any event. But that is also increased from $5,000 to $20,000 as per the statutory demand. So they're creating a hiatus period. It's really important to note that this hiatus period doesn't solve the landlord and tenant relationship, and that's probably something that we're going to need to touch on in more detail tomorrow or Wednesday. But whereas your trading relationships between debtor and creditor, there's some massive changes here because of these protective mechanisms, the time frame and the thresholds. That won't apply to landlords seeking to re-enter premises if rent is not paid. And you know, the comment we'd make, and we'll extend upon it further in the next couple of days, is get on the front foot really early, have the conversations. The outcome of those conversations is going to depend on how you're trading, the financial position of your landlord, and the position of your landlord's financier if the property is mortgaged. Now, I've had a pretty comprehensive read through overnight. There's some commentary from the big four banks as to deferrals of residential principal and interest, but as best I can get a grasp on it, commercial landlords are probably going to fall into a general hardship kind of discussion with their banker if they are forced to give concessions to a tenant. So yes, have those conversations early, and we'll extrapolate on those over the next couple of days as we see them unfold. I would say in relation to some of the big institutional landlords, what we're hearing from them is that they're not going to enter into one-on-one deals. They're going to make a blanket announcement over the coming week or so. You can only deduce from that they're going to try and have some talks with government to see whether they can get some of that backed as some kind of incentive or stimulus. But I would say that's just a buying of time technique. I'd be surprised to see whether there would, in the next 7 days, whether there would be a huge amount of defaults. I would be extremely surprised, but please be aware of it as 1 April rent starts to become due. You really need to be across this if you're a tenant, and conversely, as a landlord, you need to have a strategy as well as to what you will do when people come to you. Do you have financier obligations that you need to deal with? and alternatively, in very rare instances, as I understand it, for commercial property, is there loss of rent insurance that can be claimed. I'm just going to defer to a question. Yeah, so I've had a pretty valid point there, that a lot of property in in Australia, particularly in small to medium enterprise, is owned by self-managed super funds. Self-managed super fund reporting obviously requires rent to be paid on time, requires the auditors to be very strict on those financial statements and any defaults that have occurred. It would make sense that you would think that there will be some kind of concessionary measure at some point when this all comes out in the wash to say, well, you can support the trading enterprise by not paying your SMSF during that period. Haven't seen it yet, but it's very common sense. So thank you for that comment. The last comment I would make on the pieces of stimulus, and it wasn't any sort of express mechanism, but it was buried in the preamble to one of the papers, one of the Treasury papers. It sort of said that the ATO would be lenient on wind-up action, it would be lenient on director penalty notices, and it would be open to payment plans and remission of interest discussions during this time. What I would suggest there is, most of the good SME accountants that we deal with, many of whom are on this webinar, are very well placed to negotiate payment plans for you with the ATO. If you don't have anyone that can assist you with that, and you do have tax arrears in your portal, please don't hesitate to shoot us a line and we'll connect you with someone that can help you. But yeah, the commentary, although not a specific stimulus measure, is that the ATO will be available and will be behaving as they always do, as a model litigant, or a model creditor, if you like. All right, so just from a timing perspective, we've got 10 minutes to go. There are some state-by-state stimulus measures, particularly around payroll tax. Probably the most generous for SMEs is in Victoria, probably then closely followed by WA. But there's varying degrees of either refunds or waivers, and most are increasing. Most, if they haven't already, are increasing their payroll tax threshold from, many have been around the $750, $850 mark, and they're coming up to $1 million. So trying to help that SME sweet spot on payroll tax. Don't have any more questions, so I'll move on to some of the questions that have come in earlier by email. All right, so I'll stop that screen share for a moment. Now I'll just go across to some of the questions that have come in overnight. All right, so we've got 10 minutes. I won't get through them all, but we'll get through as many as we can. The first one is, how can I find out if I can get government support? Well, the links to the Treasury website, the Treasury COVID-19 website, is the best place. Those fact sheets are worth their weight in gold. Whilst sure, they're lacking in detail, but they came up with them in the space of 10 days, so give them a break. The best thing you can do is jump on, read the practical examples in the fact sheets, and then jump straight online to Centrelink, which I believe is now called Service Australia. Second question relates to employees. Thank you for that. Do I stand down employees on no pay? Let me take that as a standing question, but I would make, for the next couple of days, I would make this comment. We know, sure, some of you might not have the cash to pay, but I think you'd be well advised not to take drastic action, and unless you're one of the businesses that has been expressly closed down, at least buy yourself the rest of this week to consider your position, take some advice if necessary as to the implication of the Section 524 stand down provisions, and whether your employees will have access to fair work and the alike. There are many other things that we'll discuss in the next couple of webinars around flexible working, reduced workloads, leave without pay, the use of annual leave and the impact on the balance sheet. Hopefully some of our accounting colleagues can jump on the webinar to help us with that topic. But yeah, I'd be really reluctant to say you've built a good team and you're going to chop it all out from under you tomorrow because of a knee-jerk reaction. I think most businesses could at least tolerate 2 to 3 days to get some advice on that, would be my comment. I had another comment on that theme, which is a really sensible, practical one, and that's what we like to kind of hear in these comments. Sorry, one moment. I'll just be 1 second. Just to give some light heart to the mood, my daughter's woken up and is screaming her lungs out, and I need to get my wife to go and get her. So if anyone wants to give me a thumbs up for that in these sad times, I'd be pleased to receive. All right, so someone said to me, so one of the questions yesterday was, yesterday my staff agreed to take 2 weeks of unpaid leave and wait for government incentives. They prefer to stay without pay instead of lose their job. Flows from the first point. If you can get an arrangement like that this week to take some advice, see where you're going to wash up on the stand down provisions, then you'd be well advised to try and meet that arrangement rather than just taking the axe to something that you've probably built over the last few years and has taken a fair bit of brain power and financial power. What have we got? 308. I'll just check whether anyone's come in with any more live questions. Yes, we've got a couple. For retail stores in large shopping centres, insert institutional names that we won't pick on here too much. If we're forced into lockdown, would it be fair that rent wouldn't be charged for that period of closure, as you're not allowed to trade by law? Really good point. So this topic today, I wanted to do with stimulus. Tomorrow it's either going to be employee wind down and stand down provisions or landlords. Those two are the next pressing. Would it be fair not to charge? I'll leave you to make a commercial judgment on fairness. Contractually and legally, is there a provision that says they cannot charge? Look, you'll see online that there are a few legal commentators talking about whether the contract is frustrated, meaning that the landlord can't perform it because they can't provide you a premises from which you can conduct your permitted use, or whether in a very, very rare instance that there's a force majeure clause in a lease that basically either party is relieved from their obligations. I take a differing view. I think landlords are on extremely strong footing here from a legal perspective to re-enter cash bank guarantees, basically follow the terms of the lease. I don't see frustration of contract being a useful avenue. Of course, look at it on a case-by-case basis, but I don't see it being an effective avenue for getting out of rent, because most people are going to want their premises back. Now, the primary remedy for frustration of a contract is termination of that contract. So my comment would be sensible, fast discussions. Yes, in the other breath, I said to you that those institutional landlords aren't entertaining one-on-one discussions as we understand it at this time. But be on the front foot. Your best thing would be to do a cash flow or a cash burn forecast with your accountant. For some people are saying Some people are saying 12 weeks, others are saying longer, but at least for the foreseeable future to say, okay, what does it look like and how much am I bleeding and what are the remedies when I factor in the refund in the April, in the running account in April, what will it look like for me? So sorry, that's a typical lawyer's answer, but just to reiterate, and we'll go into it further, my comments are landlords are in a strong position. Most landlords are not unreasonable in nature. They know that they want tenants on the other side. Start the discussion early. And I think it's probably more about a sharing of numbers and saying, well, okay, this is what we're making, and if anything, and how can we help you with your financier? How can we give you more long-term insurance that we want to stay in this site? And how can landlords help tenants in the short term? But yeah, get on the front foot with those. Got another question. Yeah, really good point. For those of you that have retail leases with foot traffic commentary in them, that foot traffic is going to be down. There may be some discussions to be had there with landlords around whether, as to whether the relevant retail leases legislation in each state and territory kicks in to potentially provide a reduction of some sort. Okay, so that's the live questions. Okay, we've just got another one. What if we're in a forced shutdown position with rent? Okay, so that's the hospitality, the fitness, those kind of businesses that we've seen go at 12. And look, I think if any of us are realists, it would be highly likely, unless we get it under control a lot quicker than other countries around the world, that we'll probably see more to come beyond those businesses that have gone today. Again, there's some arguments that some legal commentators are making that if a landlord can't provide you a premises from which you can conduct your quiet enjoyment and conduct your permitted use, that then basically that they can't comply with the contract and it's either frustrated or there's a force majeure. It doesn't really change the position. There may be some things to look at in relevant retail leases acts across the country where that applies. But again, I think self-help remedy for those of you that need to move fast and don't want to get tangled up in getting some technical advice, the best thing you can do is start to have a discussion. And if the discussion doesn't go where you want it to go, then you come back and say, okay, I need to take some advice on that now. All right, that's fine. Okay, we're just going to go back to another couple of questions that have come in overnight. I've got time for maybe one or two more. So we've dealt with that one. Would you let me know if a landlord is obliged to abate in the circumstances? As I said, there may be some angles in the relevant pieces of retail leases legislation across the country. My advice today in a crisis situation is to start the conversation, see how far the commercial conversation gets before turning to the documents. Then I've got a question that says, in the case of a shutdown situation, will I be granted X months rent free, and does it mean that it will freeze and not impact the, and then will it be frozen or will it just be chalked up to some kind of later account balance? Again, that's for the commercial discussion. My commentary would be, given this is a discussion that's happening en masse, have the commercial discussion. If you cannot comply or you're not mildly dissatisfied with the outcome as opposed to being happy, because no one will ever be happy in these outcomes. If you're not mildly dissatisfied and the outcome is tolerable, that's when we should start to have a look at specific leases and pieces of legislation from both the landlord and tenant side. Should I contact my landlord now or wait? Contact your landlord now. If I've closed the business for good because of COVID-19, do I get my bond back? Likely not. That was the commercial bargain that you entered into at the time of the lease, as with the landlord. Look, again, it's that comment that first instance, commercial negotiation. Second instance, if you're really, really, really unhappy, as opposed to being mildly unhappy, then we take a look at the lease and the pieces of legislation around the country. All right, I've got another, it's 3:16, so we've had our 45 minutes. I'll just defer, I've got a couple of extra questions there from the audience overnight that we'll deal with. Tomorrow, I think more questions than not are coming in about employees, and given that we're closer, given that the end of the month is still a week away, I think we can deal with landlords in a little bit more detail on Wednesday. So tomorrow we will deal primarily with employees, specifically stand down, redundancy, those kind of concepts. If anyone has any questions either on those or more broadly, then please send an email to me overnight. It'll most likely be Olivia that speaks on the webinar tomorrow, but we'll keep it pretty fluid each day as to what we're working on. Other topics that we've got on our list for this week, and they're evolving to suit you guys as you need them, are so employees, landlord-tenant relationship, debtor and creditor relationship, particularly in light of these new stimulus measures, and then consumer law stuff, so refunds, repayments, credit notes, etc. Beyond that, we'll just keep going as to suit your questions. Look, I hope this has been helpful. I hope I haven't given you too many lawyers' answers. This really is a genuine attempt to try and give a little bit of something back to help people. My team have been phenomenal over the last week. We implemented our working from home policy last Monday. They've stood up very well. They've been resilient. They're really giving their best, and that's all you can expect at this time. I've got a couple of comments here. I'll just check before we sign off, but thank you to the 59 of you that jumped in. Thank you. They're all thank yous. No, thank you for taking the time out. I know it's busy. Perfect. No, absolutely our pleasure. Feel free to share it as widely as possible. We'll just keep buying the Zoom subscriptions until it goes through the roof. So get people on board. We don't have all the answers, but we're trying to give you some practical outcomes for you and your clients as we go forward. Thank you, guys. Have a great afternoon. Keep your head up. We're in a pretty good situation. We're not working at most of us are not working in the relevant ICU units. Hats off to those people that are. But I think we can definitely say that COVID-19 has hit the business world. And yeah, hopefully it doesn't hit the health world as hard as it is hitting the business world. So thank you very much. Have a good afternoon. Take care. Cheers.